Good morning, my neighbors. I am tardy to the party. I know, I got you. Unfortunately, some chaos kind of happened. I'm over here dealing with a trade that's similar to this. This is my paper trade account on this, and I was doing a one-on-one. So I want to say I am sorry for running a little behind. But that said, we got a lot of stuff that we're going to be going over, trying to get all my streams together. Listen, I get it. You probably don't believe in one-on-ones and you feel like you could probably trade by yourself. That's perfectly fine. But I'll tell you this right now, a lot of what I am seeing on this screen, I kind of teach a technique on my charts. I send charts that are very similar to this, but with more markings, with more descriptions that just let you know exactly what's going on. And they usually are one of my A plus setups. So yes, of course, there's no such thing as a 100% type of trade, but I just want to disclose that at the end of the day, from a scalper's perspective, all the way down to a swing and investor's perspective, I can help you gain the fortunes that you're looking for. So click the link down below, get the like, subscribe, and the share button going, so that way your friends and family can get all this great knowledge. All right, so let's go ahead and just do a recap of all the indices. NQ is still kind of rocking up. I played it to the upside on my PA, and then after that, I started playing it to my downside when I was doing my one-on-one. A little not concentrated on wanting to take a trade, but generally speaking, this thing does look like it wants to pull back just a little bit. I think there's more upside, but we'll see how that goes. But you can kind of see, got a nice little doji here. I think we could continue to make new highs. You see how this daily is looking, but unfortunately, the way the daily is looking, we got ourselves a little bit of an issue here. Bearish divergence. This right here is probably going to be a little bit of an eyesore inside of the market. Let me take my alerts off. That's probably why I'm getting so much low landscape on my screen. But yeah, so you can see right here, we're just having just a little bit of trouble letting this oscillator really push to the upside. Now, stochastic is all right. This is what you want to see out of your stochastic. But that MACD, that thing is telling you that there is very low volume and it could go ahead and reverse. I do think that this thing can rise. I really do. But for now, I'm going to go ahead and take these opportunities. So then let's go over to CL for oil. Oil does have their inventories that's going to be reporting later on this week. I do think they're going to start to report something along the production. If it's up in production, we're going to have some real fun on that one, because it's probably going to go ahead and try to test the lows. If it doesn't, then maybe we'll get ourselves a real pressure against this fair value gap that was put. But you can tell they tried 1, 2, 3, 4, 5 times to see if they can go ahead and recapture that area, and they cannot. So very interesting spot for oil. This is gold. I like where gold is. Unfortunately, because my one-on-one kind of ran over a little bit longer than I expected, I pretty much see this wedge that's here. Already got everything prepared, but looking at this wedge, it's nice. It looks like a pennant. If you don't know what a pennant is, I'm going to give you a nice little crash course on it. What you want to see out of your pennants is this nice little pull to the upside. And what price action then does, it's almost like we get this almost like cool down period as people are consolidating. Most times it's a flag. It does something like this. But the pennants, what I think about pennants, I feel like pennants are much more powerful than flags, because flags is a channel, but the pennants is letting you know that buyers don't care that you want to sell. It's almost like they're putting pressure on the upside, like, listen, eventually you're going to give up this upside and we're going to go ahead and just take out this whole entire wedge. So looking at this wedge action, that's where you get that pennant feel, where it kind of does that little triangle type of action. And as soon as it breaks out, and that's why I like the pennants, is because as soon as it get tight, you know you're close to it breaking out. The flags, on the other hand, it kind of creates that channel. That channel could go all the way to the 50%, and I've never been really a fan of it. So look out for this bullish pennant. Nice curl up on the MACD on the daily. So I think gold has another leg to it. I don't know if they're going to get the full pull because we've been running crazy, but I could see at the very least 36,000, maybe even 37. I'm sorry, 36,000. 3,600 or 3,700, somewhere around there. I play too much on NQ. I think everything's in the thousands. All right, let's go over to silver. Silver is trying to make a nice little pop-up, which is going to be very fun because I think if it gets to $40, it's going to literally drag gold all the way up to that upside. So let's see how this actually pans out. If you see silver, and maybe set an alert if it breaks out of this top, there's a chance that gold is running with it. All right, so let's go over the British pound. British pound is trying to do a nice little recover, hence putting pressure on the dollar. And if it puts pressure on the dollar falls, and NQ and ES usually rise. That's why I like charting the British pound. So we could kind of see nice little curl up on the MACD, even though it's below the zero line. If this crosses and the stochastic starts to take hold, we're probably going to go ahead and test some new highs. Look for maybe that 1.4. That's possible for all my Forex traders. Yeah, maybe a little less than that, because look at that. That's a nice little order block right here. So maybe let's go with 1399. That'd probably be a little safer. But if you Evil Knievel and like to kind of like jump over ramps and see if you can go over this ramp right here, because this is a nice little downward trend and there's a lot of sell side liquidity, we probably could pop up into that 148, which is like the midsection of that area. All right, let's go over to Bitcoin. Bitcoin is trying its best to keep this rally going. I think if it came right back inside that 113, maybe even 114, we could get ourselves a nice little pop to take us into that 125. I don't think they have enough strength for them to get that 125,000, but a nice little pullback would be great. But it is putting, well, we just talked about with gold. That's very funny. They say that Bitcoin is digital gold, right? So why is it wedging like this? Could this be another sign of going into commodities? Are they respecting it just like a commodity? Is the capitulation on Bitcoin finally in? We'll see. All right, let's go ahead and keep this going. We got the Russell. The Russell, now this is going to be very interesting also, because if you think about it, the Russell should be rising. So if we start to pile into gold and Bitcoin, could the Russell, being a little bit of a kind of like a slow walk up as they kind of push into the upside, could that be the case that's going to bring it all the way to like 2,500? That could make things very interesting. That will be almost like a sign that the tariffs are working. We want more domestic product done. This is more of your smaller cap companies tend to be domestic. Your large cap sits on your S&P 500 and your NASDAQ. Not saying there's no international business here, but it's majority of the domestic businesses that we have here. So just keep an eye on this. If this thing starts to ride, maybe less tariff talk starts to show up, and then you'll probably want to pull your cash out of something like the Russell. And then we got the final one, the infamous, undoubtedly the most powerful currency in the world, the US dollar. At least that's what I want to say. But yeah, with the British pound kind of pushing up, you can see that the dollar is pushing down. If the dollar pushes down, that should give us a nice little pop in the market. And that's what you want to see if you got some equities that's out there right now. But just be a little careful. We have been in this lower register on the MACD with the dollar. I do think we're closer to the top than we are to the bottom. So if we do create some type of support, look for those as key targets that bears wants to kind of shoot and try to take out on the market. And then you're going to see that the dollar starts to pop and put pressure on all the bears and come bullish on the dollar. All right, let's go ahead and continue. Go ahead and pull out a pen and a pad, because it's going to come in hot. We are going to break down the news. So we got a couple of things that I want to go over because this week is going to be very, very fun. A little far. Okay, so we got a couple of things here for today. Not a lot. This is going to be your auction bills and everything else. I don't really expect much coming out of that, so as far as volatility. But when we get over to Tuesday, you got this guy. If you don't know what happens when this Jay Powell starts to run in his mouth, I suggest adjust your position when the market opens today. If you've never experienced a Jay Powell, if you got some long-term investments or anything, then it might be sound. Maybe that's why we're getting this pullback right now on the dollar, is because as people are trying to adjust their positions, maybe they were sitting on puts. maybe they're starting to buy up their position to protect those. You know what I'm saying? Like there's a lot of couple of things that I want to see out of that. Also, you got money supply, which is going to tell us what is going on in the Federal Reserve. Are they just sitting there printing money? Even though money is mostly digital, but are they sitting printing money? Are they going to start burning some of it so that way we can restrict the dollar, bring the value back up, and then that's going to put the pressure on the market. So this is going to be very interesting, these two reports, and I think this is probably why Jay Powell's talking at 8:30 in the morning. He just don't want us to get any sleep. So I think he's probably going to go ahead and break down what is going on with that money supply. We got all inventory that's going to be coming in. That's the first part of it. Mortgage rates, existing home sales. This is the true oil inventory that I'm very curious about. This is probably the one that's going to really put some pressure on the U.S. oil that I was discussing. If the up on production kicks in, maybe we get down to $55. That's a possibility. But if not, maybe we just go ahead and hold stagnant until we get close to this line and then we reject. I don't think we're going to get upside. I'm not saying that oil is a laggard, but I would say with all these alternative fuels, now they're talking about hydrogen and everything else, solid state batteries. There's just so much things. They're just looking to get away from oil. So just keep that in mind. If you're in CVX, ZOM, Phillips 66, those things are probably going to be affected based on oil inventory each and every week. So keep that in mind. And then we got the 20-year bond. This one's going to be tricky because I think with Jay Powell talking about money supply, I think the bond rate is going to be a little different than expected. So look out for 1 o'clock on Wednesday for it to be a little tricky. And then when we get over to Thursday, we got some stuff that's going to go on with Europe. So we probably get some really, really good volatility over there. Canadians going to have their retail sales. And then we're going to have our continuous jobless claims. If you don't know how this works, this is going to be where we kind of break down a few of the things that's going on with the economy. If people are not working, then it swings one way. If people are working, then it swings the other way. It affects the money supply and everything else. So keep in mind on that. And then new home sales. Now, that one is what I'm curious about. Home prices are coming down, and I think it's because there's less demand. People can't afford these interest rates. Maybe that's why Trump wants to fire Jay Powell. You know what? I don't even want to get in the middle of that. But, you know, at the end of the day, lower interest rates will then up demand, which people start buying houses, and maybe the prices go back up again. But then it's going to lead to inflation, and then your Snicker bar is going to be only 3 ounces for the same $1.50 that you're paying for. I don't know, maybe whatever the case may be. But looking at this, new home sales has such a domino effect on what goes on to the market. So I would say just keep that in mind when you see this. At 10 a.m. is when that drops. We got some more bill auctions that's coming in and the Fed balance sheet. This is going to tell us a lot on where they're going towards interest rates. If they're starting to really divest the way that they said they were going to, then we should see a more of a clearer timetable on when those interest rates going to take hold. And then last is Friday. Of course, after a beginning of earnings season, they're going to throw a Molotov cocktail at the end of the week. Durable goods is one of them because this is going to get a lot of the information from things that has been affected by the tariffs. So look for this information to add some volatility as well. All right, so let's go ahead and get this going. So I got a lot that I want to cover. So let's go ahead and get this news going. Like the first thing I want to cover is this, right? Very interesting. He did say that he was going to go ahead and rein it in. And I get it, right? You know, Charlie, God rest his soul, he's no longer here. I really wish I could go out to Omaha and check him out one of these. But since he's stepping away, Berkshire Hathaway continues to underperform on his exit. Now they are trailing the S&P 500. If you don't know, when I talk about this a lot, the common consensus is you want to sell the news, buy the rumor. So I'm pretty sure there was a lot of people that had a little bit of an inclination that he was going to go ahead and retire. But if we look over at Berk B, you will then notice that at the end of the day, yeah, it's been pulling down. But what a lot of people don't want to talk about is the fact that look at how many weeks it's been away from its moving average. So could this be the bottom? Could it continue down? The stochastic is pinned all the way to the bottom over here. So there's a possibility it could give it a little bounce. What if their earnings that's on August starts to rally at this point? So when you're looking at this, take it with a little bit of a grain of salt because this individual is a beast. Just to let you know, because at the end of the day, since 1964 to 2024, which is many, many decades, his stock is up 5 million All right, just to kind of let you know. So if you think that this company is going to go out of business sometime soon, I'm just telling you this right now. It's not going to happen because they're up 1,000. No, no. This is their Berk A. Okay, so there's Berk B and there's Berk A, right? And Berk A will make your heart stop. It would have to, you know what? Let me just pull up the chart. It would basically make you cash in your Bentley, sell your summer home in the Hamptons, so that way you can be able to afford one share. That's why he built Berk B. You have no voting rights whatsoever. You get to bask in the glory of what is Berkshire Hathaway, but at the same time, you can't get into the cool kids club. It's $710,000 to get one share, and you're talking about a stock that's up to 812. I think he was trying to stay in with Charlie until it gets to 1 million to kind of prove the point that he can pretty much do whatever he wants in the market. But to kind of give you a little context on why it's so expensive, they only have, oops, just closed it. They only have 542,000 stocks afloat. That's it. That's all they have. So it's very, very limited. Hence the reason why they return so much money to shareholders. Instead of going the dividend route, which most companies go, it's just the appreciation of these shares. Can you imagine if you actually was born in like 1964 and you actually went ahead and bought a Berkshire Hathaway? Oh, I can't even go to 1964? Oh, hey, there we go. So we're talking about 1980s. That's the earliest. It was $1,000 in the 1980s. That's telling you that this was a sound company. All right, let's go ahead and keep this going. We got a couple more things that I want to cover. Like, for example, this one here. They are talking about Apple. If Apple makes a foldable phone, analysts say the stock will benefit. Look, I'm not saying that they won't, and I won't say that they will, but I would say their version of their augmented reality is a little bit pricey for the common user. No one's going to spend $1,000 for an iPhone, let alone put a PC on their face. Very, very cool technology. If you haven't gone over to the Apple Store and at least test it out, I do suggest you do so. But generally speaking, this stock has been completely and utterly stagnant over here in the middle of 213. Just completely. Not even partially. Like, it's just, you're talking about almost 3 months where we stayed between 194 and 213. So I'm not really a fan of anything that is happening here with Apple. I would like for them to kind of like break that 213 and hold to kind of give me a little confidence. It's either that or they got some type of major big reveal, which again, what can you do with technology? A foldable phone, I don't think it moves the needle that much, but I will say this, and I'm not an advocate for it, and I'm not a fan of anybody getting fired. If you replace a Tim Cook with a very pit bull type of person, like I don't know if you could get a Ginseng Wong like over in the video over into there, and I'm not saying that the video CEO is going to leave, but if you could get somebody from his team to come over there, you're probably going to go ahead and see Apple get a nice little surge of investors believing in them to bring some innovation. Apple's usually in the forefront to a certain degree. They usually copy other people's technology and make it better in their ecosystem, but generally speaking, I think Apple needs to major shake up. All right, let's go ahead and keep on going. This one is analysts on Wall Street are raising their price targets on Netflix after the streaming giant earnings. Wow. So they're upping the target. Well, let's go look at the chart. Let's see. What if you're going to up the target, there's got to be something on the chart that says that this target should be up. Because the earnings, they dropped it, right? You're talking about $7 that it returns to shareholders, $11 billion. Maybe they said something in their guidance, but right now they closed at 1,209, which is a far cry from almost 1,400 over here. But I think they want to test this 1,000 area, 1,100, maybe 1,000 all the way down here. This is major area fair value gaps. We're under the 50 EMA, but the pre-market is trying to push it back up. We got a massive bump and run that was about to play off over here, but they just said, nope, we're going to push this further. Grabbing liquidity. Again, if you don't know which part of the market cycle you're on, you're probably the liquidity. So if you actually thought the earnings was going to be positive and you went and bought calls, there was nothing in here other than this bear flag that was presented here, or micro bear flag, that was showing that it was going to go ahead and test. I like it to test somewhere around this 187 and then bounce, because then I'll feel like there's a nice little support off of this fair value gap and continue to that upside. So let's see how that goes. If they do make the upside, I think they're going to take out a lot of this sell side liquidity. I think the momentum could be strong enough to get us into 1400 territory. Some of them talking about 1600, but hey, listen, I'm not saying that it's going to get there, but if Netflix does a split, I think it could. I really, really think it. I think there's some money on the sidelines, but they're not deploying it only because Netflix is this high. No, Berkshire, what's going on? Anyways, let's go ahead and look at the next one. Last article that I have for you is something a good friend of mine's, as we were kind of like going through charts and everything. Shout out to Rich. Playing online gaming stock Genius Sports for a prospective breakout, says Carter Worth. If you don't know who Carter Worth is, he's a chartist. I'm a chartist. I like chartists. So there's got to be something on the chart that he sees that I want to see as well. Let's go ahead and look at it. I want to say it's GENI, right? Genius Sports. It's already popping up right now. But again, remember, sell the news, buy the rumor. All right, so let's go ahead and see how. If he's saying upside, I know he's not trading on the 2-hour chart. So let's go ahead and look at this from a monthly chart. See if there's something. Oh, hold on. Let me go in the weekly. Oh, okay. So if you haven't played any fair value gaps before, let me go ahead and show you what that looks like. This thing looks like we are trying to test a fair value gap. I'm gonna bring this over so y'all can get a nice little peek. See that? That's a nice little fair value gap that was built over here into this week here. So what happened here? Oh, 2021. Everybody was selling everything. You know what this reminds me of? It reminds me of my baby SoFi. Everything was just selling off, and now SoFi is looking like a beast. Anyways, let's go ahead and keep this back going. So Genius Sports is trying its best to kind of like break through this center pivot here. And I think it could. Oh, and they just got their weekly 200 EMA to show up. And look at that cross. That is a nice one. So looking at this could probably give you a nice little solid push up and get us up into that upper area, maybe $14. So this could be a nice little sleeper depending on how their earnings. Let me look at their earnings. Okay, this is fundamentally speaking. Okay, so they've had times where they said it's going to be a penny of a loss. Okay, so they had some times where they said it was going to be a penny loss, but on this earnings, they were anticipating a 3-cent loss, but it actually was only 3 cents, which is a 24% surprise, right? So when you see surprises like this, that means they're returning more money to shareholders. Their revenue is 143 million. Let's see, did they guide for higher revenue? No, but they're anticipating half of what they lost last time. They might be at the edge or the cusp of profitability. And if you don't know what happens when a company decides at the end of the day, we found our path into profitability, go ahead and holler to this one. This was Uber. It was estimated that they were going to be at a 1.15 of a loss, 287% surprise because they got their books right. And you could kind of see from this point on, it was nothing but a rally. You're returning money to shareholders, you're their best friend. You don't return money to shareholders, you're Boeing. I'm just playing. I'm just playing. All right, let's go ahead and keep this going. So we got some earnings that's going to be coming up the next couple of days that I want to check out. The first one I want to bring up is Domino's Pizza. And now, this is not your normal ticker that you want to kind of have when it comes down to trading it, but I can see as a solid investment overall. They've changed a lot. If we go back to Domino's back in like the 2014s, 2015s, it tasted like brick, right? It was just terrible. So right now it looks like they finally are starting to get a little bit of a stride here. I like what it looks like on this chart because it looks like we're getting a wedging action. But generally speaking, you might want to kind of like catch the bottoms. Their earnings is just slightly they missed, but overall they return money to shareholders. They are $1 billion in revenue, and that's what you want to see. They're looking for an increase. But one thing that I did notice with this one is that somehow in December they tend to have more revenue coming in. Now it could be football season or whatever the case may be, but this one right here, that was last year around December, reported in February. This one here is December of 2023, reported in February, and you can kind of see earnings, nice little pop, kind of rides out for the summer. And then there was one that looked like it did not give you that same action, which is 3 years ago, over at 2022. So is this a dynamic shift? Is that what they're doing? But you can kind of see this earnings, 1.4 billion in revenue. So they consistently get 1.4 billion in revenue around that time, but then 1.02, 1.02, and then 1.1 is what we're getting so far right now. So I'm very curious on how they treat this stock. I think there is more upside from a fundamental standpoint. Again, I'm a technical analysis. If you want fundamentals, go ahead and holler at your advisor. I am not a fiduciary. I am not the person that's telling you where to park your money, but I think this chart looks good from an analysis part. All right, and then another one I have is NXPI. NXPI is one of the ones that just didn't really benefit to the semiconductors. Of course, if you already know the semiconductor, this is NVIDIA's chart. Looks like a monster at this point, but NXPI has earnings that's coming up, and I think if it's solid enough, you might get a nice little pop, kind of similar to what Datadog was a laggard in the cybersecurity space, and then they just popped out of nowhere. You might get that same type of action over at NXPI. Looking for this to kind of give you a nice little pop, maybe 244, maybe 255. Right now it's up $2 in the pre-market. Let's talk about what's going to happen tomorrow. So we got DHI. That's a good company, especially with the housing information coming in. Are they going to report something saying that they're seeing more building permits being pulled for some of the land? That's probably going to be a catalyst that adds to the new home sales that we get this week. And you probably get DR Horton get above its 200 moving average. It's been a while since it's been up there. Last time it was up there was around October 2024. And then you could kind of see they missed on their earnings slightly. Like I said, return money to shareholders, you're their best friend, because they're not going to let this thing just go to the ground. It probably just came back to its valuation, kind of went against its means a little bit, and I think this is our bounce, and I got a nice little trend line here, which it's following. We're closer to the bottom than we are to the top of that trend line, so I want to see if the earnings is going to give us a nice little gap up, just like we had a nice little gap down. This could be a nice little trade to that upside for my IV flushers. All right, let's go ahead and see. I got RTX, Raytheon. No longer Raytheon, now it's called RTX. They get government contracts, very solid company. They have earnings coming up tomorrow. They're anticipating $20 billion in revenue. Like I said, they bring in cash. They're still around that ballpark figure here, so they raised their guidance coming in. Probably looked at their contracts and realized that there's some more. 8% of a surprise, which is good. That's what you want to see out of your companies. And probably one of those don't stop, won't stop, it just continues up. It's at 150, which I think from a psychological level standpoint, it probably could pull back, maybe come back to like 143 before it goes up again. But based on this angle and this trajectory and the way this thing is moving like a beast, I won't be surprised by the end of the year it's at 175. So just keep that in mind for Raytheon and their earnings. Lockheed Martin. I think this one's going to need a savior from their earnings. If their earnings does not smash, you might have a little bit of a problem if you are a Lockheed Martin investor. Now, this is after the whole entire wars that's been going on. You know, this is a drip down since 2024. It looks like we're not funding them to the way that we did before. They did miss drastically here. So government spending on arms is probably slowed down. I don't know. I haven't heard Trump talk about the whole entire Space Force anymore, which is very, very interesting to a certain regard, because I would think that companies like Lockheed Martin could benefit from contracts like that. So this is going to be very interesting how their earnings are. They do pay dividends. They do return money to shareholders, but it's been dropping off. I think they're starting to get back onto their stride. Maybe it was a contract that they got back. and making sure that they stay in line. They did aim a little bit higher than what they had before with a 14% surprise. But this 18 billion, is it priced in? Are they still accumulating? Keep an eye on Lockheed Martin, because if they are accumulating here, we may go all the way back up to 582. All right, TXN. If you don't know who they are, I traded this back when I first started really doing option trading. Nice golden cross here. Another in the semiconductor space. You probably know them for their calculators and scientific calculators for when you was doing a lot of that freaking crap for college. I mean, all that fun education that you could always know and love, like statistics. Yeah. Anyways, I'm looking at this one as a very, very interesting ticker. It rode very similar to NVIDIA. So I won't be surprised that this pulls back to its 50 moving average. They do have dividends that they're going to be paying out, and you could kind of see all the bearish divergences on this MACD, especially this one right here. This is tough for them to get through. Now, if this recovery does take off and it breaks that high, we can ignore that bearish divergence, but generally speaking, it might need something. All right, the next one is COF. This is Capital One Financial. This is also going to be there tomorrow. The financial space has just been ripping and roaring. JPM, Morgan Stanley, Goldman Sachs, all of them. Capital One hasn't reported yet. I wonder if they have a surprise for us. Are they going to get into the investment space? I know they have high yield, but all banks are getting into the, hey, you can trade your money while you're inside of our banks type of thing. And this is going to be very interesting. If they announce something like that, I will not be surprised that they get up into here. But I would say this Capital One, you got a lot of competition if you go into that space, because Robinhood is coming for all those investment banks, like your, what's that doggone thing? E-Trades, Weebles, all of them. So you're going to have to come with something similar. JPM, you got to do better. That thing is trash. SoFi beat you. Anyways, let's go ahead and look. I got a couple of things in my earnings cycle that I'm very curious about. I'm still keeping an eye on UPS. Looks really, really fun. It looks like they're trying to build its base. I think they've been going too far. We're way all the way back into the pandemic levels. Can it get down to like Nike levels? It's not a strong company, but I would say we're closer to the bottom than the top. So maybe we could get a nice little pop. I'm aiming for like the 200 moving average with my tiny position. Let's go over to Citi. Citi is not playing any games. It is continuing to just rip and roar. If you haven't watched my shows over the past couple of months, I pointed out that Citi could be coming right back here. Again, they do not, I say this, do not have the products that they had back here when they were at $500 a share in the Goldman Sachs space. Again, this is a company that has a lot of shares floated, okay? So looking at this ticker, it just looks like they're just fatigued of beating it down at this point. And this is just their reprise, so that way they can go ahead and get a little bit of breather. But if that trend starts to take out fair value gaps, moving averages, and everything else, this thing can go ahead and probably get into that 150. So I'm saying that $100 is literally around the corner, and I've been saying it since 72. So we'll see how that goes. Last one, if I let y'all get up out of here, is Coin. Coin is going. I'm not shocked, but I'm shocked. I looked at the charts. I thought this thing was going to go ahead and push up. Very, very good level. This is still my old drawing if you watched my show before. I kind of saw this pop up and everything else, and I was like, well, this is here, but if it fails this pop up, we're going to break all the way down because it looks like an M pattern, and they grabbed all that liquidity and then some. It peaked out at $444, which I think is a good valuation for that company. But generally speaking, it's time for you to cool down, just like Bitcoin. So look for Bitcoin to kind of cool down. That's going to add to the pressure on Coinbase. It might find a good price. I think maybe 375 to 400, and then we're going to rally all the way to $500. All right. Couple notable mentions. Let's go with 3M. Again, this thing did something very, very massive. Got to the 164. If you know, we were looking for like around 155, 156. Got that and then some. Pepsi, very interesting ticker, has been on a decline. Not saying it's UPS, but it has been giving away a lot of its profits. It found a base somewhere around 127. So as we kind of see with their earnings, they did not give too much of a surprise, kind of in line. So let's see if the consistency kicks in and people start to invest back into Pepsi. I don't like your dividends for your price. Just to let you know, Pepsi. And then the last one is Goldman Sachs. And you can kind of see what's going on with Goldman Sachs. It's at 709. Like I said, all banks are ripping and roaring. Goldman Sachs is one of my favorites when I do chart and trade. So just keep an eye on that one. If it finds its base and it looks like a bull flag here, if it looks like a duck and it walks like a duck, then it might be a duck. So I think we're still bullish on that one. All right, on that note, I want to say thank you very much. Go ahead and hit the like, subscribe, and the bell button. That way it does that whole entire thing with the algorithms over down with Google and YouTube and all that team. Oh, also, don't forget, one-on-ones are open. It's only for a limited time until I go into my next part of my season of BYTTT. So get your booking. I'll break everything down. And also my charts are on sale. Listen, I get it. You're probably like, why do I need a chart? I can chart myself and everything else. Maybe a third party will be great. And if you're not happy with the results, cool. Money back return. There's a discount code for $50. Go ahead and check it out. And I want to say thank you for everyone that actually watches, shares, and let their friends know that I'm on. I am up to 300 subscribers. See if I can get to 500 before this year is out. And I want to say thank you to everybody that supports me, and have a great day. See ya.